Hello everyone, and welcome to episode 81 of the Impulso Podcast by Momentum Works. So on today's episode, we have a very special guest, Gavin. Hi Gavin, thanks for joining us today.
Hi.
So Gavin is a rehabilitated lawyer turned FinTech founder, and he has spent the last 8 years scaling high-growth FinTechs in Southeast Asia. And he's now building modern FinTech infrastructure to enable the next generation of tech entrepreneurs.
What is rehabilitated lawyer?
Like reformed,
Oh, okay.
grown out of the bad habits of legal ways.
What was the bad habit? You're trained as a lawyer, right?
Yes, I'm trained as a lawyer, yeah. Bad habits maybe being too pedantic, too detail-oriented on, commas and full stops, yeah, things like that. Instead of looking at the big picture, yeah. And I guess a lot of lawyers also look at the world from a legal lens only, instead of a business lens, right? Really, law is just one department in a business.
Actually, it's different, right? Because I remember in 2017, I was in the Middle East doing some e-commerce advisory, and one of the founders I was going with, every time he goes somewhere, he brings his lawyer with him. And the only reason is that the lawyer is the only person in his organization who speaks perfect English. So every time he has a negotiation with the Arab partners, it breaks down because the lawyer was like point by point, and the other part is like, fine, I mean.
Yes, exactly, yeah. So yeah, that's a translator and lawyer in one. And then things break down if you just focus in all the small details instead of the big picture. So yeah, I guess rehabilitated in that sense.
So I think before the podcast we were talking, right, and you said something like, so much money has gone into FinTech. Where did it go? So maybe we'll start with that for today's podcast first.
Yes, and I just want to quantify the number a little bit, right? I mean, so we have been tracking the tech investment in Southeast Asia together with Central Ventures, and over the last few years, I think between 35% to 41% each half year, that percentage of funding actually went into fintech and or digital financial services. So the latest number we have, which was the first half of 2023, 41% of all the funding in the region went into digital financial services. That's almost twice as big as e-commerce, which was the second largest sector. So where has all this money going to?
Yeah, I really don't know. Looking at these numbers, the reports and the numbers, I always notice a trend. In terms of funding numbers, it's always dominated by big funding rounds from a few companies. I think it's a better gauge to look at funding activity. So the number of companies in fintech, e-commerce, etc. that have gotten funding. But I believe it's the same trend, where it's dominated by first fintech and then e-commerce companies. I can only hazard a guess. I guess maybe in recent months it would be some of the buy now, pay later companies like Shopback, Atomi, Advanced AI that might have contributed to these numbers. Yeah. So yeah, I think very often these big funding numbers go into a few companies and it's not spread out in the whole industry. And there are always trends in different years. Like maybe if you look 5 to 7 years back is e-wallets, then lending companies, then buy now, pay later. So yeah, this is where the money has been going. It's not the case where it's spread out evenly across different types of financial services. Yeah.
I also have some numbers, actually percentages of exits, and apparently payment accounts for most of the exits in this region. I mean, 2C2P, KodaPay, etc., and also acquisitions as well. And it's interesting to mention about e-wallets. I remember back in 2015, 2016, when Alipay and WeChat became dominant in China, and everybody in this region wanted to say that, okay, I want to replicate that success.
Yes.
I want to build that dominance in sort of mobile payment.
Yeah.
That translates into, at some point in time, we counted 800 digital wallets in this region. Or as Dimitri Ocento would say, that Southeast Asia took a scenic road on digital wallets. But of course, I mean, at the moment, we probably realize that it would be a very different trajectory compared to what China has gone through.
Yes. Yeah. Yeah, I have an opinion on that as well. In my opinion, the core business of e-wallets, like users being on the same wallet and transferring value or money to each other, I think that business is dead. And that's largely because of real-time payments infrastructure that has come up across the world. Right? China leapfrogged that stage because the e-wallets got so much penetration that there was no need for real-time payments anymore. But the perfect example would be India, where once UPI came up, which is built and launched by the government, and it's free, then e-wallets completely died off. And this real-time payments technology is now coming up all over the world. Brazil, US, in Southeast Asia we have iFast in Indonesia, PayNow in Singapore, Do It Now in Malaysia, PromptPay in Thailand. Yeah. So really wallets as a business is no longer viable. Most of them have turned into super apps where they are trying to monetize their existing wallet users with other services instead. Yeah.
I had a chance to work very closely with some of the early product managers of Ant or Alipay. And their sense is that, first, the wallet itself for Alibaba didn't make money because, but that's something specific with China, right? The MDR, the processing fees have been depressed since the UnionPay days. 0.6%. I mean, in Southeast Asia, talk about 3%, 3.4%.
Yep.
But in China, it has always been depressed. So when you come up with a new service, you can't really charge that. So people have to go for the volume, and with the volume, then you can meaningfully embed other services into it, right? Lending, buy now, pay later, insurance, etc., etc. And if you have a large enough user base, I mean, a certain percentage will convert, and it will make sense.
Yes.
The problem in Southeast Asia, I see that, I mean, the wallets are so fragmented, which means that they can probably monetize some of the users to a certain extent, but probably not at the scale that you would expect from Alipay, etc.
Yes. Yeah, there are two problems in Southeast Asia. I think it's the overarching problem is a CAC LTV problem.
Okay,
and
that's the every tech businesses.
Yeah, and why?
We need to say CAC what is CAC LTV?
Yeah, CAC is cost of acquisition, customer acquisition cost, and LTV is lifetime value. So the customer lifetime value, right? So you need to have enough customer lifetime value to pay for your cost of acquiring the customer. If not, your business doesn't make sense, right? And why Southeast Asia has an LTV problem is firstly because of the fragmented market. So we don't have a large homogeneous market, right? The largest market is Indonesia at about 200, say 50, 70 million population, right? And then the second problem, which reduces this market size a lot, is the tipping point of GDP per capita or income, average income. Because if your income is below, I believe there's a report, it's like 1,500 US per month, then the ability to consume digital products or services is much lower, right? So yeah, maybe for Indonesia we are looking at 270 million population, but really the core customer base is the Greater Jakarta area, which is 20 million population. Right?
So you chose to build a business in Indonesia?
Yes, I did. Yes.
Was that a wise choice, or is that choice that you have to go along with it and you discover opportunities along the way?
It was at that time a very practical choice, right? Most people would have assumed we chose to build in Indonesia because of the large market size, etc. But that was not the case. I simply started building in Indonesia because it was the market I was most familiar with at that time, outside of Singapore, right? And maybe just to quickly talk about open banking, because most people know Brick as an open banking, open finance company, right? We build open finance APIs. At our core, we are a middleware layer. So we build APIs to connect banks and other financial institutions to FinTechs or other tech companies, right? And in Singapore, the banking industry is very concentrated, right? Essentially, 99% of the market is dominated by the big three banks, right? So that wasn't ideal for a middleware connector type of business, right? It's different in Indonesia, where they have thousands of banks, and even amongst the big significant banks, you can count easily 15, 20 banks, right? So it was a much better market for the business that we wanted to do. And why I started with Indonesia was simply because I had already been working in Indonesia since early 2019, right, for another company back then. So already knew the market fairly well. Yeah.
And over the years, has your understanding about Indonesia or FinTech Indonesia evolved or changed?
Yeah, in the tech space, I would say, and especially in FinTech, things change very quickly. I don't think any core assumptions have changed in terms of regulators, the market, etc. But there are always new initiatives that are coming out, right? And in fact, I would say Indonesian regulators are surprisingly forward-thinking, and there have been a lot of activity the last couple of years. So in, I believe it was 2020, they came out with an open banking white paper, recognizing the importance of open banking. Then they came up with what they call their 2025 payment vision. So it was a 5-year roadmap on describing how they would implement real-time payments, open banking, and other technologies over 5 years. Right? So some of the things have been progressing well, especially if you put it in terms of government speed or regulator speed. Right?
I think regulation is a pretty big thing that a lot of fintech companies look at, right? So do you think your background as a lawyer has benefited you a little bit now that you're in the fintech scene?
Yeah, it has. It surprisingly has. I think having a legal background would benefit any founder in a highly regulated space. Right? That's not only fintech, maybe health tech, etc. That would be a big benefit in terms of training. And specific to fintech, how it benefited me was really on the licensing side of things, right? You either have to apply for your own license or you have to leverage other people's license. And most often than not, you would be leveraging existing players' licenses, because as a startup, you need to move fast, right? And to be able to close that partnership, you will need to sketch out a regulatory compliant process, design a regulatory compliant product so that your partner is comfortable letting you leverage their license, right? So yeah, a lot of my background and work in the earlier days of my fintech journey was doing partnerships, building the right structure, convincing partners.
Yeah, I have some resonance in that. We used to run a fintech business in Indonesia before the pandemic.
Yeah.
And I remember for me, I struggled quite a bit in terms of understanding. I mean, when the lawyers advise you on something, I struggle quite a lot to understand the technicalities. And sometimes they'll ask for, give you a few opinions or a few options, say, hey, which option would you want to go through? And there's some documents and stuff. And then you hire people at the local level who are from the industry. And quite often you need to look at this and you need to say that, okay, is this a must? Or is this something that we can find a route around it? Because if everything is a must, then you can't do the business.
Yes.
So we struggled quite a bit.
Yeah, I think lawyers default to saying no, unfortunately. So they just tell you like it cannot be done. So if everything cannot be done, then what do I need you for as a lawyer, right? So I think your lawyers who give you options, those are already good lawyers. Right? At least you have a few options on the table. But yeah, exactly, that's I think how most entrepreneurs, founders should work with lawyers. They should constantly challenge the options and challenge if this is really necessary, or is there an alternative way to do it? Can we relax this proposal that you have proposed a little bit? I think that's the most practical way for founders.
And another thing is dealing with regulators, right? Because lawyers will help you do it, but at the end of the day, regulators will still need to talk to you, they will still need to interview you.
Yes.
I think showing some understanding actually helped. So this was also the hard part for me, right? I mean, as the big shareholder of that company, quite often I was interviewed by the regulators, and I need to know what I'm doing.
Yeah, very often you do not need to know all the details. You just need to know the high-level rules and what's the spirit of the rules. I think in the past couple of years, I've increasingly seen friends in fintech, non-lawyers, operators who handled the license application process themselves, and they were successful in getting the licenses. So more people. I think regulators have also changed their mindset a little bit, so they're more willing to work with non-lawyers, work with business people directly.
So maybe besides a lack of understanding of regulation, etc., what do you think are some of the other pitfalls that fintech startups face in this region that might have led to their failure? I'm sure you've seen a lot. You've been in this industry for 8 years. You must have seen a lot of companies.
I mean, CAC LTV is one of the big things that we talked about earlier. And then the second, I would say, is risk management. So, CAC LTV applies to all businesses. And it's very hard to make your cost of acquisition and customer lifetime value work in Southeast Asia because of the smaller markets, fragmented markets, versus the big homogeneous markets that we know today, like US, China, India. And then the lower average income is also a big hurdle, right? We already talked about that. Then the other big problem I would say is risk management. A lot of the fintech startups, credit-based or lending-based in the past 10 years or so, right? The big businesses would be like consumer lending, SMB lending, buy now, pay later, a lot of credit-based startups. And unfortunately, perhaps sometimes it's the push for growth that these startups relax their credit decisioning, and sometimes also fraud, internal or external fraud, SOPs and systems. And that has led to a lot of big blow-ups in the lending industry.
I think that was the discussion point that we had with many people. So we look at a lending business, right? And when you try to grow fast, quite often that, as you said, that you relax the risk control. But over the last few years, I've had lots of discussions with some of the founders from China, those veterans who had been in sort of internet finance for like 10 years or even more. And in 2019, they came in to help some of the fintech companies sort of structure their credit scoring system and stuff. And their common sense is that as long as the CAC LTV makes sense, another point, as long as the person making the decisions know how to do the risk model themselves, know how to make adjustments, then it's much easier to control, because they see a lot of problems is that the founders themselves are not experts.
Yes.
So they rely on someone that they hire.
Yes.
But quite often they hire someone from very established financial institutions who themselves don't do everything.
Yes.
So they need to hire additional set of people to help.
Yes.
As a result, it becomes a system with lots of people, and each of them making their set of decisions and outsourcing part of the decision to someone who is supposed to be more expert. And as a result, when things become a little bit tricky, so for instance, we were looking at this company whose, I think, default ratio was like 40%. They don't know how to fix it. It's like the fund was pushing the head of credit was pushing down to other people, and then eventually they said, okay, this is too risky. But from the other veterans who I've talked to, they said, oh, this is the problem. If the founder knows how to look at the model themselves, it could be easily fixed. What's your sense about it?
I think you always have to be disciplined. Once things start to go haywire, it's very difficult to fix. Because like the scenario that you described, right? If you are already at 40% bad debt or like non-performing loans, then the only way to solve that is to lend a lot more, so that your loan book size is increased a lot and your NPLs drop and you have good performing loans, right? I don't know.
But that like making things worse.
Yeah, that's exactly the next thing I'm going to say. It's making things worse. So, you really have to be.
But this is the trajectory that many people will take, right? To cover this.
Yes.
They scale up.
Yes. Yeah. I think maybe the first thing founders have to recognize is there's a limit, especially in fragmented markets, right, that we are talking about. There's a limit for every product type, every business model that you're looking to scale, right? And there's an adoption limit as well, versus the absolute limit. So if you push beyond that, then that's when your cost of acquisition spikes a lot and your risk spikes a lot as well. So I think as fintech founders, you have to be very aware of that limit and the rate of market adoption, and not push too much beyond that.
I'm thinking about a friend of mine who runs consumer lending for one large platform, and they're doing well. So oddly, during a period of the fast growth, I think 2022, 2023, where everybody was like scaling up and stuff, and he controlled the pace. He said, the market now is too much risk. And then you see the business was like growing like this, but now they're still growing like this.
Yes.
So what a lot of others were going ups and downs. So at that point in time, I said, okay, you really have control the pace of your business well. He said that's what my 10 years of experience did for me, because I made mistakes in other businesses previously. Now I've learned my lessons. But a lot of founders he sees are, first-time founders.
Yeah.
So.
Yeah, I guess. And first-time founders, you listen a lot to your venture investors who want that rocket ship growth. Risk is always an afterthought, unfortunately.
I have a friend in Latin America who is now like third-time founder, and he said the principle is tell a story to the venture investors, then get the money from them, then build a business at your own pace. I said, I mean, they will get very annoyed with you for like a long time, right? He said maximum 2 quarters. And afterwards, they realize they have nothing to do. I mean, there's nothing they can do about you. And after 4 quarters, 5 quarters, they realize you are right.
That's interesting.
But that's because he's a third-time founder. I mean, he has learned all the lessons, and he knows probably better what is right, what is not right.
Yes. Yeah, and I guess he also has some reputation after being a third-time founder. Venture investors listen to him more.
True.
Maybe we can zoom in a little bit. So you mentioned that one of the things OneBrick does is open banking in Southeast Asia, right? Is it just Indonesia currently, or do you guys also look at other markets?
Yeah, right now we are fully focused on Indonesia. The ambition is always to be the fintech infrastructure of choice for Southeast Asia. Indonesia is the first market we're starting with. Hopefully, we have a few more markets in the next year.
Which market is next?
Interesting markets for us are always high fintech growth markets. So Philippines, Vietnam, outside of Indonesia, those are the highest fintech growth markets. So very interesting for us.
What do you think are some of the challenges that you would see or that you currently see in Indonesia or that you think you would see as you expand into Vietnam, Philippines?
I think if you ask me in emerging markets as a whole, not just Southeast Asia, but also other emerging markets, and we are in the infrastructure business, so that's a B2B business. Our customers are other companies, right? And whether you're an infrastructure business or a SaaS business, it's still very difficult to sell automation, efficiency, and convince other business owners to pay for that, right? Because cost of labor is so low. So that's a big challenge we are constantly navigating in Southeast Asia. But I also get the same comments from founders in other emerging markets. I think how we have solved it, right? So that's the more interesting part, is always to look at how this new feature product that you are selling helps increase revenue or profits for your customers. So pitch it in that sense rather than the typical cost savings, efficiency pitch.
Which is actually the common feedback I hear from a lot of SaaS founders, be it for financial institutions, be it for other sectors, right? We tell the business owners that I can help you expand revenue. Everyone's interested in at least listening to your pitch, and the pitching people that I can help you become more efficient. It's much harder for people to sort of grasp exactly what it can do.
Exactly. SaaS, I think in general, SaaS and a lot of fintechs are like similar to SaaS also. If you're a buy now pay later solution, that's like very similar to SaaS. It's very hard pitch and business in emerging markets.
So I think when we were discussing earlier, you also mentioned that open banking is not as exciting, right? At least maybe in Indonesia where you're operating. So what do you think is more exciting or that you're looking at a little more in the fintech scene?
So let me qualify that a bit. Like I'm in the open banking space, so for sure it's exciting for me so that I can wake up every day, right? So what I meant is maybe let me talk about open banking a little bit. So open banking, open finance, I'll use it interchangeably, has two big parts to it. Right? Many people know about the open banking data part. That's when consumers get to move their data easily from, say, their bank accounts to their fintech app, right? But open banking also has the payments bit, right? And most of the world, people would refer to that as account-to-account payments, right? Real-time payments, for example, BI Fast, Pay Now, Do It Now, PromptPay, that's also an example of account-to-account payments, right? And that's right now very exciting in Southeast Asia. The bit that's not so exciting is the open banking data bit, right? And why it's not so exciting is because for a few reasons. Like number one, demand is down because fintech funding has been down since Q1, Q2 2022, right? So there are less new fintechs coming up, less demand for new innovative data product. And then on the supply side, regulations still need to catch up, right? Unfortunately, I would say emerging Southeast Asia is a very regulator-driven type of market. Right? And it's not so laissez-faire like the US. Right? And market education also needs to catch up. Like most people today, most consumers still do not know what is open banking. Right? So they will not be asking their banks to enable open banking. There's no consumer pressure. Right? Yeah, so that's for the data part, and that's why I say it's like not so exciting. But real-time payments is super exciting. Everybody now knows the success story of UPI in India. So, and that's why all the regulators in the past couple of years have also been rushing to build and launch their own real-time payments network. Even in the US, right, with a very developed financial services market.
US, the payment's still quite slow. I mean, so many of the
Yes.
payments like within the country get settled in like 3 days.
Yes,
Yeah, it's not that fast.
Yeah. So now there's FedNow, which is supposed to be, what you were referring to is the ACH,
ACH.
payments network, which most businesses still use, most people still use. Yeah.
But there are also lots of issues with real-time payment, right? I mean, for instance, now, I mean, an issue that's concerning many consumers is all the scams. If you allow that cross-border, and of course there's a lot of, I think there's a lot of trust you need to build, or lots of like controls you need to build in the ecosystem so that you balance legitimate transactions while sort of avoid. I mean, even lots of businesses, I mean, get scammed, right? I mean, you get an email from like your boss asking you to issue a payment instruction.
Yeah, unfortunately, scams happen for all types of financial services. It's not just real-time payments. Yeah, I guess, one big definitely education is the most important to make people feel comfortable with a new technology. But I also think some sort of dispute resolution, insurance type of mechanism will be important for mass adoption of real-time payments. For example, for cards, there's a chargeback process to it. So maybe consumers feel more comfortable with using card payments because of the chargeback process. Yeah, but I think overall the adoption of real-time payments has been amazing actually. So it's not slowing down. And definitely it will be widespread in just the next couple of years.
Have you heard of this incident like a couple of days ago of I think the Singapore football team was playing against
the Thailand
the Thailand team, and goalkeeper, what's his name, like Hassan something.
Yes.
And he amazingly saved like 11 shots. And the indirect consequence is that it sends the Chinese team like into the next round, and of course and Chinese consumers dig out and found out that this person also runs a La Cinemax store, like a food store in Singapore, and people started sending like payments of appreciation to him. And of course, I mean, we don't know how much he's really received, but someone said that the bank has halted his QR code because of all this the money coming from.
Oh, okay, interesting.
And when I look at it, it looks like, I mean, if this kind of activity is allowed. At scale, then it can become a way to money launder, in a way. Like you make an excuse saying, hey, I've done something, and then people send you a token of appreciation, the money gets transferred across.
Yeah, I mean, I get what you're saying, but really the same argument can apply to any existing financial rail, whether is it cards. Like even for cards, there is Visa Direct, which is same as real-time payments. You can transfer money to any Visa number, and it goes into the account that's linked to the debit or credit card, right? And I mean, anybody can make. The rail is just a tool, right? You can create a good scheme or a bad scheme. You can create that fake story, like you said, and use any rail of your choice, whether is it crypto or cards, Swift.
Basically, when people want to commit a crime, they will find a way to do it.
Yeah.
It doesn't matter what tools you have available for them.
Yes. I remember many years ago after the terrorist attack in Mumbai, and there's lots of people saying that, so the terrorists from Pakistan used satellite phones, navigation systems, and stuff. There were some cryptography expert who wrote a blog back then saying that they also used food, water, and boat. So basically, the tool is a tool. I mean, it can be used by multiple sort of purposes, and of course, but the speed and the advancement of some of the technologies make life harder for regulators and organizations within, right? So if they want to, I mean, a safe choice would be, okay, you shut everything down so that you don't have the risk. But how to balance that? It's always a tricky issue. And I think after the recent scandal about money laundering in Singapore, I think some people are calling saying that, hey, we need to have more stringent sort of checks and controls. But I mean, any business in Singapore already know that. I mean, opening a bank account and maintaining a bank account nowadays, it's a lot of effort with the KYC and stuff. And if you step up that even further, that will hurt business.
Yes, agree. Yeah. It's not just for consumers or small businesses that regulations have increased. For business operators, for like payments processors, etc., regulations have also increased a lot in the last 5 years. So the Payment Services Act in Singapore, that umbrella regulation, a similar movement has happened in all the other Southeast Asian countries. Right? Regulators have generally rolled up different licenses into one Payment Services Act and also included previously unregulated activities into that license. So the amount of regulation in general for payments, for financial services have gone up a lot in the last couple of years. Yeah. For example, one example is merchant acquisition, like providing the POS, that Wirecard service, is not regulated previously in Singapore. Now it is. Yeah.
Do you see this just happening across Southeast Asia or just generally globally as well?
Globally, the AML, CFT, which is anti-money laundering and countering the financing of terrorism, those obligations and responsibilities have gone up a lot. Not only for financial institutions, but non-financial institutions also. Like lawyers, accountants, realtors, they have to do AML checks as well. So that has gone up a lot over the years. Payments, I'm not so sure. I can say for Southeast Asia, it's gone up quite a bit. Yeah. But one thing I would say about AML and CFT regulations is they're not effective at all. Yeah. I mean, the banks, financial institutions as a whole spend so much money on AML compliance, but it doesn't catch the major cases. For example, the Singapore case, right? All that money spent on AML and CFT did not catch the biggest ever case. It did not catch 1MDB as well. Right? All the big cases have slipped through.
But yet you make it hard for a lot of businesses.
Yes, yeah.
So what should they do instead? What should regulators do instead?
If I was the regulator, I would make AML and CFT compliance result-based. Or so if there's a breach, you pay a certain percentage of the breach, so that incentives are aligned. Right? So if you let, say, 1 billion of dirty money go through your system, then you pay a fine. Your fine should be percentage-based, like maybe 1% or 10%. I don't know. The regulators have to decide.
So at the moment, you mean the punishments are not proportionate to?
Yes. No, it is proportionate somewhat, but primarily now it's intent-based.
Okay.
So yeah, whether you have set up the right systems, whether you filed your suspicious transaction report, whether you have done the right steps is more what was the impact.
I see. So now is that people have to put lots of extra steps because it's measured by the steps you take, but rather than the effectiveness of the whatever you do.
Yeah, I would say the impact or the result still influences the punishment. But yeah, whether you are right or wrong is whether you have put the steps in place and whether you have done your duty under the AML, CFT rules.
So if you make it result based, so if you have, would that make, I don't know, the organization put extra steps because they're...
Hopefully they put more useful steps instead of...
I see. Interesting.
Yeah.
Which are the steps which are not useful? Or it's hard to say?
It's hard to say. Well, a lot of the things I will say on this topic will be politically incorrect. Yeah. But because there's always a business incentive, right? So especially for the sales guys, there's always incentives for them to circumvent the schemes and the rules to hit their sales targets. Right? That's the problem. Yeah.
So which means that if you make the rules very explicit, it's easier to circumvent in a way.
Yes, I would say so. Yeah, if you make the rules like you have to do step 1, step 2, step 3, there's always ways for people to think how they can squeeze the current situation to pass step 1, step 2, step 3. Right? But if it's result based and if incentives, sales commissions are also based on these results, right? There will be clawbacks, etc. Then all the incentives throughout the whole financial system will be more aligned to achieving the result.
Interesting. So basically the argument is that instead of like having like a fixed set of rigid processes, you make it more sort of result driven and make it sort of, in a way, you look at each stakeholder within the ecosystem, or within the financial organization and look at their interests and how to find a way to balance this.
Yes, yeah.
I presume that would be a hard switch for very established institutions.
Yes, it will be a very hard switch. Yeah.
There's a very technical discussion about all the regulations and payments. Maybe coming back a little bit to real-time payments, I think something we see now, especially post-COVID with the rise as travel is kind of bouncing back, a lot of these real-time payments are also trying to do cross-border payments. Do you guys see a lot of that as well, especially in Southeast Asia or generally just across the globe?
Yes, I definitely see a lot of that in Southeast Asia, both as a consumer, I use it myself, and I don't have the numbers on my fingertips, but there was a report that came out recently, I think by DBS and MAS, because DBS is the clearing bank for cross-border QR transactions in Singapore. So the growth is really good for cross-border payments via QR, via real-time payments. Yeah, so definitely something that's picking off, making consumers' life much easier.
Yeah, especially when you travel.
Yeah, especially, yes.
Because it's so easy. Besides this cross-border real-time payment, what are some other trends that you see kind of appearing now, or maybe you think in the next 5 years in the fintech scene?
There's still so much to do in fintech, I would say. The big trends that have come up in the past 10 years, right, is like e-wallets, lending, buy now, pay later. We've got a bit of neo brokerages like the Ajaibs or that Robinhood type of apps. Yeah, but many things still have not been done, I would say. Like wealth management, we have to leave out Singapore actually. Like Singapore is a very different market versus the rest of Southeast Asia, right? So if you leave out Singapore, wealth management has not been done. Neo banking is not really done yet, just starting in Indonesia. Yeah, so there's still a lot to be done. And then the penetration in terms of the population is also, we're just getting started outside of Singapore.
A couple of weeks ago, neobank in Brazil just celebrated the crossing of 100 million users. I think registered users, not active users. So they celebrated that. And of course, if you look at what they have been doing recently, a couple of things. So first, they're expanding to Mexico because I think up until a certain point, the new customers they can acquire in Brazil, their home market, becomes limited. And the second is that they started to work with others to look at large ticket, long tenure kind of loans. So they started with micro loans, right? The credit card, the small ticket items, and now they're looking at mortgage, they're looking at car loans and stuff, which means that the margins will start to dwindle. But the asset base will probably grow, which hopefully leads to like a lower cost of capital, which makes their small loans, which their bread and butter, more profitable. So I think in Southeast Asia, we don't see actually many players which have reached that stage yet, right? Massive user base, and which you can...
Yeah, not yet.
Not yet,
Yeah, I think some exciting neobanks have come up in Southeast Asia. There's Honest Bank in Indonesia. The numbers that are coming out, they have 1 million MAUs in November last year, so it should be higher now. And there is also GoTime in Philippines that is doing very well. I don't have the exact numbers, but penetration is...
I have a friend who is in the digital bank space who used to work for one of the large, big platform-backed digital banks. And his assessment about Indonesia is that very attractive And his assessment about Philippines is super hard. I said, why? And he said, when we look at the similar consumer profile, the Indonesian consumers just seem to have much more money compared to the Philippine sort of consumers.
Yes,
and
that's right.
he doesn't know why, but this is what he says in the data. Yeah.
Yes, GDP per capita. Right? Indonesia's GDP per capita,
Twice,
average
right?
income is much more than Philippines. Yeah.
So you can use this number to explain this.
Yeah, I mean, consumption is a lot more, disposable income to consume is a lot more, so your transaction fees are high. Whatever interest on the base, the bigger base, you also earn more. Yeah.
So assessment from that friend is that lending business in the Philippines is attractive because the alternative people have in the market are very expensive and probably not very efficient. Because interest rate is expensive because you need to cover the bad loans and stuff,
Yes,
right?
yes.
And if you can have a better sort of credit scoring, theoretically you can lower, whatever you charge to the consumers. He sees that in a lot of opportunities, but he doesn't see much opportunity in terms of attracting consumer deposit to use as a lending source in the Philippines as compared to Indonesia.
Yes. I think that's the big secret that neobanks have to crack. So getting your customers to deposit their salary into the neobank account. Right? I think the most successful neobanks in the world are the UK-based ones, Monzo, Revolut, and Starling. Yeah, so a lot they have successfully convinced a lot of their users to switch salary depositing into and use the neobank account as the primary bank account.
And here, what do you think is the challenge? Is that because the money is relatively concentrated in the middle class and upper middle class? And of course, the ultra rich, they don't deal with their own money, so it's fine. They have people, the whole establishment serving them. But when you look at the middle class and slightly above middle class, so they have options, right? They have options.
Yeah.
And for somebody new to come in, it has to be much more attractive than the existing option to bridge that sort of switching or education cost.
Yeah, that's true. Yeah, you either have to pay a lot more in terms of interest rates to attract people, but that is short term. I think the long-term and better solution is to provide a much better customer experience. So online sign-ups, great digital app. Yeah, that's it.
Which if you look at some of the, in a few countries, if you look at the current experience provided by banks, theoretically it's not that hard. You know
Yes.
exactly where you can provide better service.
Yes.
But I think the difficulty is that how to realize that from product, from risk control, from everything.
Yeah, from licensing, that's the big one because capital requirements are very high for banking license. And especially in Southeast Asia, many banks are unwilling to lend their license to startups. Right? That's not the case in US or Europe, where you have a lot of banks loaning their license to fintechs. Yeah.
What do you think is the reason for that? So one theory I heard from some people is that, but that's commenting on a separate but related topic. So somebody from one of the large fintech players in China who have global businesses, and he's saying that the Southeast Asian regulators they deal with are actually quite professional, and his assessment is that this whole region has gone through 1997. So that changed a lot of thinking about, how regulation should be applied and how the banking sector or digital or the financial sector should be sort of structured. So many of the whatever that they imposed or whatever that their thinking has evolved is still relevant today.
I don't have any good answer for this really. I have some insight into Indonesia. For Indonesia specifically, all financial institutions, including banks, have to submit an annual business plan. So if they want to do a new activity, for example, partnering a fintech to launch a new bank, that has to be included in the business plan that was already submitted last year. So execution would take longer. But overarching reason that explains this phenomenon versus North America, I don't have any answer for it. Yeah.
So which means that whoever who wants to build that kind of financial service, digital financial services businesses, they just have to be more patient in a way.
Yeah, they have to be more patient, or they have to raise a lot more capital to acquire their own license, which is what Tonic and GoTime did in Philippines. Yeah.
So that's the alternative trajectory, right? You raise more capital, and that's probably an easier sell to the investors. Because it can be quantified. I mean,
Yes.
if you tell investors that I need to be more patient, it's pretty hard to quantify that. Yeah.
Yes, true, agree.
Maybe one last question that's a little less on the technical side. So you've been in the fintech scene for 8 years, right? And now you're a founder. So what have you learned as a founder operating in this region or in Indonesia? Or just as a founder in general?
One of the biggest lessons I have, and which I learned pretty early on in my startup journey, is momentum or speed is the lifeblood of startups. So
Momentum works.
Yeah, even if you're moving in the wrong direction, you just have to move, right? And so you move fast, you find out that what you're doing is wrong fast, and then do the next thing until you find the right thing. Yeah. So momentum is super important. Maybe for more recent lessons, I had a thought, but I forgot.
Is that something you learn as a founder? That sometimes you have too many things in your mind.
Yeah, definitely. Yeah.
How do you manage it?
Yeah, I learned to calendar and write down everything, right? Especially in the last couple of years. Yeah. If it's not in the calendar, it doesn't exist.
Do you find that's the case as well, Changan? If it's not in the calendar, it doesn't exist. Even if it's in the calendar, it doesn't exist for Changan.
I don't know how to comment on that. But I think so one thing I have learned is, I mean, as a person, I mean, since my young age, I always knew how to deal with things which are uncertain, things which are left hanging. What I do realize that a lot of people, I mean, we run a company, lots of people around you, many people have the personality that they want things to be certain, which will make them very effective, but also make them very, very stressed. So because Sabrina's nodding her head. Are you that kind of person?
I've learned not to be so stressed.
So a lot of things, it's something that you can't, from a result point of view, you can't really just look at it, I mean, do something, then that leads to a certain result. Quite often, I mean, you do something, you are either left with ambiguous result or no result. So learning how to like live with it and sort of evolve the business as a whole rather than, okay, I need to get that piece of work done, complete. It's probably a psychological shift for many people.
Yeah, agree.
So I think that brings us to the end of today's episode. Thank you, Gavin, for joining us today. And thank you guys for tuning in to another episode of the Impulso Podcast. We hope that you guys enjoyed today's episode. And if you did, do like our podcast and subscribe on YouTube, Spotify, Apple Podcasts, or your preferred podcast platforms to stay up to date on the latest happenings and trends in tech, new retail, and the broader digital economy. Thank you, and bye-bye.